Hi, everyone, and welcome to July's version of Student of the Market. At THG Retirement Solutions of Raymond James, we break down the noise and deliver a clear monthly snapshot of the markets so you can stay informed and focused on what matters most. Let's take a look. Let's talk about market momentum. We just encountered the best June and May months in the US stock market since 1950, but international stocks are still leading this year. Historically, strong spring rallies often lead to solid second halves. You will see on this chart what has followed the top May and June months in the stock market. The dollars dance with international stocks. Here's something interesting. The US dollar is weakening, and that has been a tailwind for international stocks. When the dollar drops, foreign investments look better in terms of the dollar. That's part of why international markets are outperforming and why we need to stay diversified. High valuations don't always mean trouble. Yes, you will see here that the PE ratio of the trailing 12 months earnings is at 27 right now, but that doesn't automatically mean a crash is coming. In fact, low valuations have historically been a better predictor of strong returns than high valuations have been a predictor of weak returns. The markets are tougher than headlines. You will see these geopolitical shocks and how, over time, they've affected the markets. Even after major events like 9/11 or the invasion of Ukraine, long-term returns have remained surprisingly resilient. We all like to talk about cash, and cash is piling up, but what is it doing for you? Amazingly, according to Morningstar, money market funds have hit $7 trillion. That is a lot of cash on the sidelines. But here's the kicker. Most bond funds have outperformed cash over the past year. So sitting in cash might feel safe, but it's not always the smart investment. I'm sure you've heard of the 60/40 portfolio and the diversification that it brings. But the classic 60/40, 60% stocks, 40% bonds portfolio is having a tough time. For the first time ever, it's capturing more downside than upside. But over the long haul, it still displays the benefits of diversification. And as a final takeaway, markets continue to move fast and headlines can be noisy. But staying diversified, understanding the big picture, and keeping a long-term mindset is how you stay ahead. If you have any questions or want to talk through this and what it means for you specifically, don't hesitate to reach out to our team at THG Retirement Solutions of Raymond James. We are here to help. Thank you for tuning in, and we'll see you next month.